And we are live. Welcome everybody to the Bootleg Weekly. Welcome, Roy. We missed you on the SoFi show on Friday.
It's good to be back. Good to be back engaged in the action. What did I miss?
Not too much, honestly. Here, let me do this.
How about a new 52-week high close for SoFi?
Oh yeah, was that today? Was it 52-week high?
It's today.
Hey man, I will not be satisfied until we break 2850. That's the level that I want us to break. And do you know why we hit that 52-week high, Roy?
Let me guess. You sold covered calls.
I sold cash secured puts with $23 strike price when SoFi was at 22, and I showed them to Tanner, and I regret to inform everybody that SoFi will be falling in the next couple of days because I actually closed those cash secured puts up 50% in 2 days, and so now the market has no incentive to prop it up anymore.
Oh, that's a shame, but it was fun while it lasted. So,
yeah. Welcome everybody. Wow, Roy has a lot of people on his stream today.
I guess I was missed. Thanks, guys.
Yeah. Let's see. Swapped a few shares of Palantir for SoFi. Billy Jack, man after my own heart. Selling Uber to buy Duolingo tomorrow. We'll let's pin that and let's add that to the end of the show.
Yeah.
Spain shirt, yes sir. You know it.
And SG Kumar, could you explain that about Monday and Google tweet?
Yep.
Well, maybe we'll start there. Today we're going to talk for sure some HIMS, little bit of Lululemon. Duolingo is one we're going to talk. Maybe the trade desk, which I know is like last week's news. Ethereum. There's a bunch of topics to cover, so we're here for it. As always, if it's not a related question to what we're discussing, we'll still probably try to hit that towards the end when we do question and answer time. But yeah, let me throw this up because this was something. Monday is one of those companies that has always been on my radar. Not always, but for a while. Very good SaaS company, but trades at very high SaaS multiples. And it had a triple beat and fall. Actually, we've seen kind of that trend with a lot of names getting punished just because that they have too high of expectations going in, even if they're unwritten expectations. So I was looking at Monday, and one of those things that stood out to me that was really interesting, they said that some of the weakness in their report was, even though it was a triple beat still, on the lower end, basically that they're having a trouble converting cells as efficiently as they were previously with Google's ad play. So they said specifically that they had both co-founders on there. By the way, one of them's named Roy, so I'm like, maybe that's why I like Monday so much. I don't know. But we saw some weakness on the lower side of the business. Part of it is because of Google changes. Part of it is maybe some other trends that are kind of hard to understand, kind of where we exactly, he rambled. But we see a bit of weakness regardless of the Google search. And look, we try to be as transparent as possible about the impacts we see from the search engine. It's not just that material right now, but it's a start of a trend. And so basically there's some shift in their strategy. The reason why I highlighted this was two things. One is I'm looking at Monday as a swing trade or possibly even a long position. I don't know that I'd want to go long in because I'm in Palantir too, and like you can have too much SaaS. Although I like Monday a lot, and the fall was pretty unjustified. It's not like super cheap here, but what stood out to me that was really interesting here was this is part of that trend that's happening on the advertising side. Which, again, Google bulls will tell me, oh, look, revenue is great. Yes, revenue is going to be one of those last pieces to move. The issue is the model that the entire internet was built on, which is because of Google. Like, honestly, that whole thing is shifting. And a lot of people are going to begin to see shifts like this. Search engine SEO guys were certainly the first ones that noticed the trend. And a lot of them are being alarmist, I think in part because, honestly, what they do is probably going to go extinct eventually. It's not going to be overnight, but they're going to see a lot of consolidation in that space. So it makes sense for them to be crying out, whether or not Google is being disrupted or not. But there's also others that have noticed a trend as well. And every single time a report comes out, Google, that there's a professional study, every single time Google attacks the methodology and says it's flawed methodology. And they've been right a couple of times, but man, when there's smoke, there's fire. You're seeing on the Apple side in this. So this is basically what I'm seeing is this is part of the shift where a lot of companies that basically were reliant on Google to be able to build and expand their business, they're starting to see this is a small shift. It's not massive. Google's not dying. Their search revenue's not driving up completely, but it's going to lead over time, and I think we'll see that accelerate over the next couple of quarters to less spend on Google just because they realize the ROI is just not there the way it has been. That's a beneficiary for some other types of advertising, like the Trade Desk was impacted, and they're a part of this shift. Like a part of their business is not being disrupted at all for advertising, but some of it very much is. Versus something like AppLovin, which thankfully Tanner got into that one, but that's one where their model is not being disrupted at all because it's not dependent on basically internet clicks by real human eyeballs. So that's what I was basically saying is this isn't alarmist. It's not me being bearish on Google. It's just me saying, hey, here's another data point. Now, there is a bit of a mix. There are some like booking.com that had a ridiculous benefit from Google search that was not expected. And so in essence, what's happening is a bit of a mix shift. There's going to be some companies and places that benefit a ton, like Booking. There's going to be some like Monday that are just impacted a little bit enough to make them move some of their spending. And then there's some like the New York Times, which is like they're getting no clicks, no click through at all. And so they're going the Cloudflare way, where it's basically putting up check posts so that AI agents accessing the content make sure that they get the paid as creators. So long explanation, but that's why I threw that up there. I thought it was interesting. I don't read like too much into it, but it's the beginning of a shift.
Have you ever tried Monday's platform?
I've played with it, but not like it's like a demo thing. It's not actual. So have you used it?
Yeah, I work in product management, and it is a tool that every organization I've joined, I have migrated the company out of Monday actively.
Interesting.
It is so overly convoluted. They try to make everything easy and they just make it way harder. I usually move my teams over to Notion or Airtable, depending on what they use case is. Monday is like, it's like a poor man's Jira. Atlassian Team, TEAM is the stock. But in my opinion, they try to simplify, but they end up overcomplicating. There's a lot of automations on Monday, which is good. But at the same time, I think it really depends on the company size that you are. And it sits in that weird middle ground, that awkward middle stage of the company, because if you have a large company with hundreds, if not thousands of employees, you would just use Jira, because Jira is, a project management tool on steroids. It has everything you could ever need. And if you're a small startup, then Monday is too convoluted for you. You would just use Notion or Airtable. And I agree 1,000% with Tanner here. I would absolutely be an investor in both those products. I use them both. Or actually, for the tech nerds in the audience, one company that I would absolutely invest in the private rounds is it's a project management tool. It's called Linear. They're like design led, fantastic, super smooth experience. I love it. And so my point is Monday sits in that weird, awkward middle ground where you don't want to do too many of these platform migrations of your project management, because you're going to lose a lot of velocity in between. And so you really only want to migrate once when you're going from a small company to a large company. And Jira is obviously the flagship that everybody uses. But in small startups, which is predominantly what I've worked in, is Notion or Linear is what I push teams when they're smaller. And then at some point, we just bite the bullet and take the move into Jira. There's not really a necessary use case to move into a middle ground and then move into Jira, because Monday has functionality that's lacking that Jira has currently, but it's more lightweight than Jira right now. And so I don't know. That's like my bear case, I would say, on Monday, as somebody who is in the space and has used the platform, and I know it relative to all the competitors, is something that would probably be way more useful for companies of 100 or 200. But those companies can get by with either Notion or either Jira with just minor growing pains.
Any thoughts on the Google piece?
No thoughts there. I mean, we could talk about Trade Desk. That's an interesting one. I think Trade Desk is, after that drop, man, holy moly. And especially because they also dropped like 30% a couple of months ago. That you put those together, and that to me was like, I was looking at the option chain and I said, well, is this an opportunity for me to do a UNH type of mean reversion play? Because I don't know. I didn't seem like, I did a cursory view of the earnings, and it didn't seem to be like as drastic as people were making out to be. It seemed like an overblown reaction. And so Trade Desk looks like an interesting possibility right now from a play.
Yeah, it's, I mean, like looking at it, I had a little bit more time, so I took a glance. There is a little bit of weakness there, but I think largely this drop was, it was just, you look at analyst expectations, and that's like the written expectations of what it is, and they were fine. I mean, it's a triple beat, I believe. Correct me if wrong, but numbers were good. The problem is that they ended up, you can see this massive gap, by the way, here, just being priced not just to perfection, but beyond perfection. And so when you have a company it's slowed down in terms of growth, we'll look at Duolingo here in just a second, but it's not growing as rapidly as before. There are some headwinds. Part of that is, last year was a major election, and so it shouldn't be shocking that year over year comps are a little bit harder. But revenue growth, I mean, that's not really what you want to see, especially as expensive as it is. So if it hadn't dropped, imagine PE ratios, close to 100. So margins are still good. There's a lot of numbers that looked very, very good overall. Revenue is, a little bit lumpy. It always will be with this type of business. Operating expenses gone up a little bit. That's not a huge deal. I thought there was one. None of those are it. For myself, part of their business is being disrupted. Part of it's not. I think it's incredibly well managed. Like, the biggest issue is also that their competitors are growing at a faster rate than the Trade Desk. Growth has really slowed down. Jeff Green had some comments on it in the earnings itself. But yeah, for myself, like, I looked at that versus the App Levin drop, which I was very tempted by. I didn't get in. Tanner thankfully did. And I was like, ooh, this drop seems really unjustified for a name that, like, it has no disruption at all as far as their advertising model. So I would have rather have gone into that one. I didn't go into either. Happy to just kind of be selling cash secured puts and sitting in cash.
Yeah. It's really interesting, man, because I mean, look, if you rewind the tape a couple of weeks ago, we were saying how it's nice to be in a heavy cash position because earnings always presents opportunities. And that's exactly what we're seeing right now. We had earnings and you had several names get oversold. I mean, HIMS is one of those names. You could say it's justified or it's not justified. Trade Desk, Duolingo, holy, I want to talk about that. I'm excited to talk about that, actually. But there's so many names, right? Like UNH got killed down to 230. So it's going to be really interesting. I actually posted a video that was a full portfolio update. Right now it's locked to members only, but I'm going to make that public soon. So following in Roy's footsteps around sharing my position allocations. And it's crazy because I made a screenshot on August 1st and I had like 30% cash or whatever. And then I put the video out on August 10th, so 2 days ago, to members. And my allocation in cash was like 16%. And I think now it's even less than that because all of my cash is getting allocated based on some of these deals that we're seeing in the market. And that's exactly what I was waiting for.
Nice. Yeah. Duolingo, like, versus the Trade Desk, it looks a lot more interesting to me. Even though it's expensive, I think it's expensive for a reason. And I feel like that the drop down, it was just like the Trade Desk. I guess we can pivot there unless you have more on the Trade Desk.
I don't have more on the Trade Desk. You want to pivot to Duolingo or HIMS?
Yeah. Let's do Duolingo.
Sure.
So Duolingo reported. I saw people say, "Oh, it ended up missing," and no, it didn't. The issue was, I mean, you can see the PE ratio; it's very high. There were a couple of spots of weakness, but overall, like, the biggest thing that this dropped down for, let me pull it up here, was actually because of ChatGPT 5. In part, there's this misunderstanding of what Duolingo is and why it still is relevant. So you can see this massive spike from the actual earnings results, and then GPT-5 came out. And I'm thinking about buying this dip too for a swing. You never really know, it can remain painful. It's still not, very cheap, but this is a big, big wick down. People think that Duolingo is all about translation software. Like it enables you basically so that you can translate with somebody else. And why do that when you have ChatGPT or Google Translate or all these other things that are pretty good? Well, for one is like it's not entirely accurate, and you also want to be able to know, like, is it actually getting and recording accurately what it's saying? Now I know a smattering of enough languages that I know, like, there are times when it just completely makes something up. I was asking it to record something or translate something into Koine Greek, and it was like all over the place. And so I was like, okay, it's hallucinating, it's making things up, and I wouldn't know that unless I knew a bit of Greek. So ended up with Duolingo. Really, it trains you to be able to use a language in a fun, engaging opportunity. People, like parents, myself, we want our kids on this platform. We don't want them to be reliant on ChatGPT. Plus, there's always the human element with language, is that if you don't know very much, but if you know a few sentences or a couple of phrases, like that's all you know, it basically honors and it breaks the ice. It's a great opportunity. Plus, I shouldn't have closed it so soon. They can always spin off things like this. This is their highest or quickest grower is chess. Have you heard about this, Tevis?
Yes. Chess and music was the other one.
Yeah. What do you think of? Real quick. This was built by two people on Duolingo that are not programmers, and also they didn't know chess. Like maybe they knew a little bit of chess, but they didn't really. That's at least where the idea was launched. AI, actually, they leverage AI to basically get the prototype off the ground. And of course, when they're like, hey, this is a great way to go about, you can learn chess the Duolingo way. And it's getting a lot of traction. I believe that there's over 1 million users in their chess platform. We'll have to see about the stickiness. It's a premium only product as well. So thoughts about this? Because I know that you're an avid chess master and also music side.
I wouldn't say that. I dabble.
Good.
So, okay, couple thoughts. Completely agree on the languages front. Yes, AI is going to disrupt language learning to some degree, but I think that you have to split up language learning into two cohorts. At least this is how I subdivide them in my mind: the utility aspect and the satisfaction aspect. And from a utility perspective, I can already translate something right now in near real time. I went to Japan and I was holding up my Google Translate and saying something in English, and 10 seconds, 15 seconds later, it was translating into in Japanese. So it was near real-time translation. That's only going to get better. But I think that Duolingo really taps into the second cohort, which is the satisfaction aspect. I want to be able to learn another language. I want to be able to, actually showcase that whenever I'm traveling, regardless of the utility that a translator app would provide for me. And I think that that's not going to go away anytime soon. And it's very similar to other avenues that AI or technology has dominated, like chess, for example. You can get Stockfish and DeepMind to play a game, but at the same time, like chess is seeing a surge in popularity like no other. People want to learn it, people want to play it, and that's not like AI has become a tool and an enabler as opposed to a thing that kills that hobby or that sport or that game. Because at the end of the day, if you split it up into those two buckets, the utility side of chess might have declined as a result of AI, but the satisfaction side and the awareness around that increased. And I think the same thing is, going to happen with languages and AI as it gets better, and that feedback loop gets smaller from a utility perspective. Now, the thing that I think is unique about Duolingo that I absolutely love, and I consumed their entire earnings reporting call, and I think I'm going to make some videos about this because I'm excited about this as a play, is fundamentally, so I come from a product background, right? Product management is okay. How do we essentially package something in such a way that increases user satisfaction while simultaneously increasing our revenues and alignment to our mission? And I think that Duolingo fundamentally is a company that has productized gamification. Like whatever they choose to feature on the app, cooking, all the way to like how to be a mechanic, how to do chores around the house. All of these things, they do it in such a way where the delivery mechanism is so gamified that it makes it fun for you to learn. And I think that there's always going to be a market for that, because the delivery mechanism in itself, I think, is a unique competitive advantage that Duolingo would offer, because I can essentially, learn math through a textbook and hate the subject, or I can learn math through Duolingo and absolutely love the subject because of the delivery mechanism of how I am learning that topic in general. And you can apply that across the board. Languages, I think, is the first, instance, the first foray. And I love that this is now expanding into other areas. Yes. So that's my take on Duolingo. I think it's like the delivery mechanism and the fact that they've productized gamification is the value proposition. Because if you look at that company, I follow them on LinkedIn, and I follow what's her name? Parvia something. She's the main person who basically has created all of their viral marketing campaigns of like the owl. She like created, the owl and the whole, viral marketing social media campaigns. And if you follow this company on LinkedIn, right, I might actually pull it up. You can see all of these different tests that they run. They test everything, and they only keep what works. And they have this ruthless, iterative nature of testing new things to optimize that delivery mechanism. And I think that is going to pay dividends. And that's what is really attributed to their growth. I can learn Spanish anywhere, textbook, going somewhere, hiring someone, whatever. But the fact that people are learning it through Duolingo means that the experience is superior to learning it anywhere else. And I think that can be replicable on any subject.
Yeah, it's a learning platform, not just a language platform. And I'd love to see it keep getting sold off. It might, but it may be due for a bounce at this point. So yeah, we'll have to see. If it keeps falling, at the very least, I'll take a swing. Won't be a large. This is one of those companies too that, like, back during COVID, my family was all in Duolingo, and I didn't even realize it was a publicly traded company. And by the time that I did, I'm like, oh man. Now there is a little bit of weakness in some of the places. So if you throw this up, well, really just one to kind of keep an eye on, and that's, you're seeing monthly actives actually do a slight decline, which, I mean, that's rare. And once, by the way, it does happen. Well, that's actually up. I think that they've had that. Yeah, here we go. They have that happen occasionally. Once is just noise.
I can actually explain that.
Yeah.
So over the past quarter, the reason why this earnings report was so precarious, let's say, was so anticipated by investors was, or anxiety inducing, I should say is the word, was because there was a boycott of Duolingo over the past couple of months. And the reason why was because the CEO basically said that they're moving in an AI first direction. And people took this to mean that they're going to fire all of their employees and their contractors and replace them. And as a result, a lot of people on social media have been bashing them. You also saw their TikTok following actually fell month over month for the first time ever. And people, if you look at any social media comments that they have on Instagram, TikTok, wherever, like, there's so many people that are constantly bashing them and saying that they're boycotting them actively because of this AI direction. Now, the CEO has walked back these comments multiple times, and in interviews, he's basically said, hey, look, I just want to clarify that we want to use an AI as an enabling tool, and we're not actually firing or replacing people. But I think it's going to blow over, but that's probably what accounted for that monthly active user decline.
That's interesting. Yeah, I knew about that. I just didn't know that it had a material impact. Obviously, you can see from the results that it did. You can see that in bookings, it's slightly down. And then I believe it was subscription bookings too is continuing to decline a little bit. Now it's again, this is a little bit noisier than the revenue. So you can read too much into an individual quarter. But I mean, like, I'm basically hunting for weakness, and there's a lot of strength here. So I would not read too much into this. Like, even every segment internationally too is just going well too. So a lot of expansion opportunities for them. We'll have to see. But are you thinking about a position in Duolingo or a swing, or are you going to do like naked calls way out the money. I don't know.
Yeah, I will do a long-term position in the long-term portfolio. I actually just wrote this today on Duolingo. I would love your thoughts on my degeneracy, if you can enable me. So I wrote one cash secured put because I'm broke for 350 for September 19th, meaning that if Duolingo is below 350 by September 19th, I must purchase 100 shares. For $35,000, and if it is above 350, I keep $3,700 in premium, which is a pretty hefty premium because I wrote it like $20 in the money. I think Duolingo closed the day off at what, $322, and so to write it at 350 is kind of risky because if it keeps falling, then obviously I don't have a real margin of safety. But $37 at 350 gives me like a $313 break even. So I really liked how juiced the premiums were on that particular trade, which is why I made it. But I, regardless of that, want to start a long-term position and start accumulating some shares.
So you're happy to own them at 350?
Yep.
Okay. Yeah. There's nothing wrong with that. I think
it's like $17 billion market cap at 350, something like that.
Yep.
And I mean, look, with the company growing 40+%, and I think this boycott is going to blow over. People have short-term memory with these things. And I think if Duolingo, them expanding more into music, I think that's going to be something that pays dividends down the line. And we'll see where they expand to in the future. But it's something that I want to have a position in it because I feel like I was shocked that this thing didn't hold the rally that it had. It jumped 23% and it just didn't hold it at all. And I think it absolutely should have based on those earnings.
Yeah, I mean, they were really good earnings. So, but what's very common is it trades on the narrative. And honestly, sometimes the narrative just follows a price action too. So if things get more sour there, that's when I'll be very, very interested. I don't think that it's going to go too far though. It's a strong company. They have a very clear moat that continues to only deepen over time. And yeah, doing what you're doing, like if you were like, well, I'm just chasing the premium, I don't really want in there, I'm willing to like roll down, I would say that's a mistake. But since you're happy buying at 350, then I mean, it can fall further. And one of the things that a lot of people do too is when a stock falls that hard and that fast, like Duolingo, is the 3-day rule. And this is more for somebody that might be a little bit newer to the market. I know that you're aware of this, Tevis, but I'll throw this up. It's basically the idea that a lot of people will sit, especially institutions, will sit on their hands for 3 days after a large drop. Now, what's a large drop? It depends on the company. It depends on who you ask to. But this is a large drop. And so that's really maybe what we're seeing here. We're when actually a little bit further down. And there was a little bit of buying pressure here too. So I'm not saying we're at the bottom. I'm just saying when you see these big moves, don't always rush in unless you're like, hey, this is unjustified, it's silly, and I've been waiting for an opportunity. Don't always rush in the next day and get in. You might let things bottom out a little bit too first.
Yeah. So if you go on Amazon's chart, you can also see this where basically they waited a few days and then they started buying. So if you look at that, Amazon.
Let me just add them here. And actually, it'll be cleaner if I do it that way. That way we'll see the candles.
So you see the dip. You see the second day, it dipped even more. And then on the third day, it was kind of flat. And then on the fourth day, it started bouncing up. And then you can also see this with UNH after they reported earnings. It was exactly the same pattern. So you'll see the earnings. Yeah, they dipped.
Yeah, here we go.
Yeah, earnings, they dipped. They fell for a couple of days, and then they started rebounding back. So
and PayPal. Wait, no, that's probably not.
The PayPal is a 3-year rule.
Yeah. Just a pain, man. But yeah, it's a common pattern. It's one of these things. It's almost like a self-fulfilling prophecy at this point, especially when there's larger investors and wells and institutions waiting on the sidelines. Now, that doesn't mean that every single time you see a drop like that, it's going to take that long. App 11 is actually one of those that's an exception that proves a rule. And you actually don't see it on the chart here, but in the after hours, there was a massive drop. We were trading down at, was it 330s? And I mean, it just
so one other thing, I want you to pull up one other stock. because this also followed the 3-day rule, but in reverse. The ticker symbol is MBIS on this little known ticker, Roy. I don't know if you.
I held that before. Yeah.
No, NBIS, Nebius.
Nebius. Okay. I was going to say Microvision's probably not worth, but yeah.
We got this 3-day rule. The gap is the earnings. And this thing is just on fire right now, man. Holy.
Oh, yeah.
I have been wanting to
holders.
Yeah,
I had a nice swing in it, but I just decided I'd rather be more in NVIDIA, and it's safer. Like this, it's a good company. Like I didn't see any red flags or issues with it, but I like NVIDIA, and I have no regrets.
Yeah. The earnings were fantastic. Honestly, the growth rates and where they want to go and just the fact that they're growing so incredibly aggressively, I think, I definitely feel underinvested a little bit after earnings. And honestly, man, like we got to give Manuel his flowers because that guy he fully sold out of HIMS and he caught so much flack for it. And then he went like all into Nebius, and that thing has treated him so well ever since he made that change.
Yeah. He's he could normally hit trends and hit companies well before. So great job by him.
Shall we talk about HIMS? Did you see the news?
The shares.
Yeah, the CEO. Yeah. So people were freaking out about this the other day, and like I think that it was a fundamental misunderstanding of what the CEO's position is. So basically, the news was a Form 4 dropped yesterday on the 11th that the CEO Andrew Dudum sold 660,000 shares worth about $33 million on August the 7th, so mid last week. And people were kind of freaking out, but if you look at Andrew Dudum's holdings, he has about 24 million shares. So this was like 2.7% of his position or whatever. It wasn't really a big percentage at all. I think the reason why people were skeptical or questioning this was, one, it was an open market sale, so it was not a 10-5B plan. Two, it was, right after bad earnings. And three, more importantly, he actually responded to somebody in the retail community who was like, if Andrew responds, I'm going to go all in on him. And Andrew responded. And that was actually like one day after he had sold shares. And I kind of agree with this comment. I love when management responds to retail. I just like the timing is not great.
Yeah. This is so two things on this. One is usually whenever you see a lot of your compensation derived from stock-based compensation, which is typical for the C-suite, you are going to see insider sales. You just are. That's the nature of the business. That's the way it works. There's the old saying that there's many reasons to sell, but there's one reason to buy. You could be buying a bigger house. You need more yachts. You have a startup project. You want to diversify your assets, and like 90% of your assets is in just one company. Even if it's your company, it's like, man, it's okay to diversify. It's okay to take gains. It's okay to, sometimes life happens. You have a baby, a grandchild. You have a son that gets married. And you want to bless him with a house, something like that. Those are all great things. This is a little bit different too, because it wasn't just a pre-planned scheduled sell. It was just him saying, all right, now's the time to sell some shares. I think with that, coupled with HIMS not buying back some of their own stock at all the last quarter, it's indicative of not that HIMS is overvalued, expensive, anything like that. It's been this is the first time this year that he sold anything. So it's not an alarmist thing, but I think for me anyway, it's a bit of a signal that it's at least in the fair value territory. I don't think it's expensive. I don't think it's ridiculous here. I even sold some cash secured puts at lower levels, but we'll see if those fill or not.
I don't think it's the first time this year he sold, because he sold on July 18th as well. I have Open Insider here, and a lot of it is exercises, but there's a couple of sales this year. So July 18th and August 11th were the two sales, and then the last one was in September of last year. But the amount is definitely way larger than the other amount. So 660 for the latest one, and then 50,000 was the July 18th one. So that was like super minuscule, $2.5 million. One thing that I did want to draw people's attention to was this post by HIMS House, where HIMS released an official statement following the insider sale. Quote, Andrew Dudum remains the company's largest shareholder and has not sold any of his personally held Hims and Hers shares. The reference sales were indirectly associated with Mr. Dudum outside of his personal holdings for tax and philanthropic purposes. Andrew continues to hold his full personal stake and is committed to the company's long-term growth. Thoughts on that?
Yeah, I mean, like, this is not a red flag. I think Elixir Sports said Paul Cerrito. I don't think that's quite the right last name. He's a bear on X. There's some on HIMS that are like bearish on literally everything. HIMS could cure cancer. That's not the business they're in, but I'm just saying. And they'd be like, well, this is really bad because reasons. And then there's also bulls on the other side too, that every single thing is great and good for HIMS. I like to think that Tevis and I are more objective. We're shareholders, so certainly it's clear where our bias lies, but this is a nothing burger. And like, if you're skeptical, if you're watching us for the first time, look back at that live earnings call that we covered for HIMS. It was not, great. It was not awesome. In fact, my most recent video was on HIMS, and it was their worst earnings call since they've been public. It's one where I'm happy to hold. Like, over the short term, there's some headwinds, some of their own making and some just macro stuff. And it feels like a hold for me right now. Long term, I think HIMS is positioned very well. So,
yeah, I agree with that, Roy, and I agree with this comment that Sagik made. I don't even like HIMS commenting on this because it just panders to like the most minuscule of protests from the retail community that they need to, as a company, justify why the CEO is selling. And the fact is that like any executive who has part of their compensation in shares is entitled to sell those shares. They're by no means beholden to keep them, to be the first in and the last out. Every CEO sells. It's just that if HIMS, and I saw this comment in one of my YouTube videos that I made, where basically it said like, if HIMS had reported an extra $15 million in revenue, nobody would bat an eye on the sale because they would have, triple beat and whatever. It doesn't matter. Like, he's earned that appreciation because the stock has gone from, $20 to now $50. And the other thing that I said that I was like, oh, I don't love the timing because of obviously the comment on X where he commented to that retail investor. And also because it was an open market sale. And then somebody responded saying with a stock as volatile as HIMS, it would be very difficult to do a 10-5 BE plan because you don't know if that thing's going to be at $20 or $200 if you schedule it ahead of time. So open market sales are probably the best bet.
Yeah, and I won't bring it up, but yeah, if you guys think that insider sales are always bearish, look at Robinhood, look at Palantir. No, it's just many, many reasons to sell, one reason to buy. Now, insider buys, like Jared Isaacman buying his own stock, Shift 4. I sold cash secured puts on Shift 4 just because I'm like, okay, this sell-off is kind of silly. And I like that insider buy, so that was very nice. Yep, good comment. You do you. Any more on HIMS, or do we want to pivot to maybe? I know I've seen some comments on Nubank. Nubank has earnings on Thursday. We can go there. I do want to talk Ethereum. I know that there's a few topics you wanted to hit too.
Holy, I didn't even see Shift 4.
Oh yeah,
wow.
Yeah, there's a trend. Yeah, let me pull that up so you guys can see what he's looking at in the prettier Robinhood.
Yeah, I just added it to the watch list because I don't even have it on here.
This is actually a pretty nice example too of that 3-day rule. They reported earnings, and you would think, oh man, some massive misses. And they did miss on the top line for revenue. They missed EPS as well. Guidance they actually raised, and they raised it by quite a bit too. So that tells you this is. I've not been tracking Shift 4 like extremely closely, but I don't get that they issue guidance and they typically miss. So, and there was some reasons they went into on that, but in essence, big fall, and then you can actually see it bottomed. Well, I guess it technically was the next day, and we've seen a nice rebound. Now, part of this too is Jared Isaacman, the former CEO, the founder. He's pivoting and doing some other things, but he bought a bunch of stock, and that's always a good thing because there's only one reason to buy, right? We've seen that with Anthony Noto as well. These guys are not out there like risking their own money just for the lulz. It's because they want to make money and they see an opportunity in their stock, and they say, fine, if someone else isn't going to buy it, I'm going to. So my strike of $80 that expires this Friday is probably not filling. We're at 87.30. So we'll have to see. But yeah, this is a big drop. Payments is one of those areas that there's just been a lot of pain in. And we've seen that, I believe it was Fiserv as well, had a big hit after earnings and a massive drop, despite actually, if I recall correctly, really good earnings at the time. It has continued to bleed though. So it's actually pretty expensive still. It's kind of that space where actually a lot of fintech too, outside of SoFi and Robinhood, have been hit around a lot. One of those two is Nubank. It's a little bit different. It's not just a pure fintech. It's a bank and it's international, but it's not doing well.
Yeah. I expected Tanner to be talking about Fiserv, not you. I expected better from you.
Now, I barely mentioned it. So it's one of those, I don't know. It's Visa, MasterCard, Fiserv, PayPal, all got smacked around the same time by stablecoins. And short-term things can trade very much on the narrative. A long-term, it's based on fundamentals. And I think the market looked at these and are like, oh man, stablecoin is going to take over the world in the next 6 months. These are all done, which is really silly because all of them either have or are using stablecoin too. So it's, I don't know. It's a little strange, but sometimes you just see that opportunity. Every earnings season, there's always companies that are amazing companies that you're like, oh man, I'm never going to get an entry. And then they give you that opportunity. And some are not worth taking, like the trade desk. And some, well, I mean, that's in my opinion. I might be wrong on that one. And long-term, I think they'll be fine. But others AppLovin, that temporary dip, I was like, oh man, and I should have gone in that. I was just in this already. Shift 4, maybe Duolingo as well. There's always opportunities out there. You don't have to. That's one of the hard things though, is when you have a big chunk of money, just waiting for that opportunity is like, oh man, but it's not gaining anything other than the 4% yield or whatever.
Yeah. The FOMO is absolutely real, especially because you're seeing everything run. I just saw Broadcom, so congrats to Sagig because that thing's over $300, which is insane because the speed at which that thing ran was crazy. ETH, I see everybody in the chat talking about ETH. Do you guys remember last year when this thing was dead and nobody was touching it with a 1,000-foot pole? And now, finally, 2021 buyers are very happy campers because they're up single digits on it.
Yeah, it's not quite an all-time high, actually. I actually posted that and somebody corrected me. I'm like, oh, yeah, that's right. There's one going a little bit further back if you can throw this up. Let's see. We are at 43. All right, just a little marker there. So yeah, we're close to the all-time high, and it's been a long time. Now, recently, we've seen it on quite a bit of a breakout, including today. Part of what's doing that breakout is things like this. There's a lot more activity on spot Ethereum ETFs and companies that actually are holding Ethereum on their balance sheet as well. Ethereum is one of those where, of course, it's not designed to be deflationary, but just because of what they're burning, it is a bit. Plus, you also have some yield if you're able to stake it. But $1 billion in inflows. So the first time that they ever did that was on Monday. So Ethereum, of course, is doing very well. Let's see, where is it at? 49.51. So it's even higher than it was before. A lot of strength there. Tom Lee, he's not a dummy. He's right again. Are you in Ethereum, Tevis? Are you in any Ethereum SBET plays, or what are you doing?
I bought Ethereum back in 2020, my friend, and I have been holding ever since. So yes, I am in Ethereum. I have not bought Ethereum for 5 years or 4 years, but yeah, I think it's still there. I got to check and dust it off and make sure that everything's still there. Yeah, Ethereum, Solana, and Bitcoin. I'm in all three.
Yeah, I loaded up when Tom Lee started talking about Ethereum and stablecoin. I'm like, okay, yeah, this makes a lot of sense. $2,500. Didn't buy a whole coin. Should have bought a whole coin. I'm very close to a whole coin now, just doing a DCA thing because the price is running. And
a whole
but
coin,
I think that there's
whole coin ETH, you mean, or Bitcoin?
ETH. So I was previously. I don't know if it was this year or late last year. I was looking at Bitcoin. Well, we could just pull both up, actually. This will make more sense. Let's see. BTC.
Thank you, everybody. Right. 250 people for being here. Like and subscribe.
So here's the charts, and we can look at it on the year to date. We can see, actually, we have Bitcoin and Ethereum prior to today comparing about the same, but Ethereum's actually up 33% over the last or over year to date. Bitcoin, of course, is crushing it over the last year. If you zoom further out, I mean, they're actually pretty close as well. So, but it was all about Bitcoin. And basically, I think late last year, if I'm remembering correctly, I exited Ethereum completely. I just got out. I said, you know what? I'm going to take that money and put it in Bitcoin. I think that there's a lot more happening here, especially with regulation, a lot of companies adding Bitcoin to the balance sheet, a lot of tailwinds. And so that worked out really well. And when Tom Lee was talking about Ethereum quite a bit, that was around $2,500. And that's when I did my first buy in Ethereum in a long time. I'm like, hey, this is great. My average is like $3,000, and it's not a huge position. Again, I'm not yet a whole coiner, although next week that I'll be close, if not have it all the way there, depending on the price that I get. So, yeah, not a huge amount, but it is. Is it? Yeah, it should now be my second largest crypto holding. So I only have two others, Solana and Arbitum. So, but yeah, Bitcoin is bigger than all of them combined. So
yeah,
that one's easy to hold.
And like I've been wanting to consolidate into Bitcoin for the longest time and sell off the Solana and sell off the ETH and just buy Bitcoin with it. But honestly, I think the double-edged sword of what's good and bad with these coins is how much of a pain it is to like do any type of transaction with them. I have to like find, it's easy for you guys. I mean, this sounds like ancient, procedures for you guys on Robinhood, but like I got to go to the broker and see if they're still in business. And I say that tongue in cheek, but in fact, because I bought 5 years ago, the broker that I use is no longer in business in Canada. And so I have to, sign up and put in all my details and then fund that account, buy the thing, and then go find my wallet, load it up. Like it's just like so many steps. Whereas for something in my portfolio, I can just, it's literally on my phone. I can just do it with one tap. That's it. That's been one of the big factors why I haven't bought more. It's also been one of the big factors why I haven't ever touched it in terms of selling it at all, is that convenience of being able to do it in under 30 seconds or more.
Yeah, Ethereum, like that's one of the reasons too why I went away from Ethereum and also Cardano. I like Cardano. I don't own any anymore. Stablecoin replaced a lot of the utility of that one, but it has to run on something. And so a lot of it does run on top of the Ethereum network, some Solana. The tricky thing about crypto is like you can look at any measurement you want, but really just the inflows is the biggest thing. Like if there's a lot of people that are accumulating, that are building up their stockpiles, that are like, hey, I'm going to hold this on my balance sheet. You can take any other measure out there, and I would take that over it. So, yeah, Solana I'm into. It's a little bit easier to use in terms of utility. Staking is so much better. I forgot how painful the staking process was with Ethereum. So, yeah.
So this question and this question, I will save them. Actually, maybe let's do the LULU one because I think that's one of the topics. And then, call back to when Steve said his ledger was full. Oh boy, that guy. I love that guy. Guys, we will answer questions at the very end of the stream, like always on this show. Lululemon was a topic that I wanted to touch on with Roy because I sent Roy this video earlier today, and I'll show it to you guys as well. And I want to get your thoughts. You ready for this, Roy?
Oh, yeah.
So this is Lululemon. I'm actually wearing Lululemon as we speak. My shorts are from Lululemon. Thank you very much.
This guy's shorting Lululemon. You heard it.
Yeah, exactly. So this is the video. And I don't know if there is sound, but it's basically a giant freaking line outside of the Lululemon store. And this thing is going around the block. And I was shocked. I was shocked to see this line. And we're going to read the caption here in just a second. Line for Lululemon grand opening in Ocean City, New Jersey. There's clearly still a lot of love for this brand, and I don't think they're going to be going anywhere. Given where that stock has gone, where, like, is this an opportunity? I know you were in it or looking at it or wanting to do it as a trade. What do we think here?
I got stopped out. So it was a manual thing. It was only an option play specifically. I had a certain level where I was like, if it breaks below this, I need to get out. And so once it fell actually below 220, which I know is like, it doesn't leave a lot of room. I said, you know what? I think it's going to go lower, and it has. Now, could it have bottomed? Maybe. Long term, I don't really want to be in apparel because I'm not like the most trendy savvy guy, like stylistically. But I have observed, what this Lulu effect was, that, a lot of people are saying, I love the comments. A lot of people are saying that there is a lot of competition in the space, and that's true. Aloe is one of those. That's newer, that's growing very rapidly. There's several others out there as well. But what I've observed with my own eyeballs is every single time we've been in or around a store, it's insanely busy. Doesn't matter if it's like middle of the week, like before lunch. It's crazy busy, and there's real sales happening all the time. Now we'll see. It wouldn't surprise me if there's some margin pressure, although they've done a pretty good job preserving that. They actually did a capital raise. They've not done anything with it, which is kind of interesting because they have been very focused on actually reducing their share count. So I was thinking that was something that perhaps they were using for an acquisition. And I was thinking, hey, maybe even Peloton, but that hasn't happened. So anyway, it's not a place I want to be long-term. I think that they're probably going to be okay. Nike actually reported some really nice earnings too, which is in the same kind of sector and space. A lot of this too is tariff headwind stuff. But it's hard for me to know. There was one thing that came out that was really bearish. Placer.ai. They basically keep track of a lot of different things, but in part foot traffic in to stores themselves. And Lulu's foot traffic was way down, which I'm like, okay, clearly it's not that grand opening place. Clearly it's not in Houston, Texas. But I'm sure that there are areas where they've had weaker foot traffic. And so I think that added to the pullback even further for Lulu. But it's trading by almost every measure you look at it quite cheaply relative to its normal range. And so it wouldn't shock me that this is actually a really nice trade. But again, I got to listen to my own rules. Otherwise, I would have actually had quite a bit more losses. And so I ended up getting out.
Yeah. So one of my friends who exclusively is like a social arb investor and who invests just on Google Trends posted about Lulu asking for more context around this increase in search volume with Lulu leggings starting in June. Basically, we're seeing a spike here with the Align leggings, which we haven't really seen historically. So you always have spikes, around the same time in the year, but we're seeing a new spike here in terms of search volume, and you can see all the search terms up top here. And I thought that was interesting. And here, so you can see some of the breakout queries here that are rising. And it's all about this Align brand, which I don't know too much about. Like, granted, okay, I don't know too much. I haven't seen Lulu's financials. I know that the sector that they're in is going to face headwinds as a result of tariffs. I know that the sector that they're in is going to be, one of those indicators for macroeconomic trends, like how strong is the underlying economy based on that like discretionary spend essentially. But every female that I've talked to says that like a pair of Lulus is like their staple. Like, yes, Aloe is a thing, Gymshark, whatever all these other brands are. I understand that they might be stealing market share, but I think Lulu, by and large, and this is anecdotal, but by and large, is seen as a staple for a big part of that demographic. And I don't know how that volume is changing. I'm only looking at foot traffic. I'm only looking at search volume and all of these sort of social arbitrage type of indicators. And yeah, I know Chris Camillo is in Lulu. That is one of his plays. He's big on social arb as well. But it could be an interesting turnaround play. Obviously, the financials and the guidance would have to dictate that as well.
Yeah, the other thing that was interesting about Lululemon, but again, I'm out, is they did a generational jump. And that's not always the case. The trends and the brands that people in our adulthood are using and enjoying are not necessarily those of the next generation. But with teenagers, at least, Lululemon is still very much a thing. And like, even to the extent where my daughter we'd never been to Lululemon before, I don't know, 4 or 5 months ago. Took my wife there a couple of times actually. And then my daughter wanted to go once too and check it out. And so we got a little something. So just so she could even have that bag. I don't know if you know about the bags. I'm sure you do. But she's like, I just want the bag, Dad. I'm like, all right, we'll buy something. But she was telling me like, oh man, it's very popular among her friends and it's popular among that crowd that's seen as in. So I'm like, but I don't know. We'll see. Like long term, yeah, Arlie says buy some leaps and call it a day. I mean, like I thought about that too, but yeah, I was just in it for a swing. So if it keeps going lower, I don't know that it'll revisit this low. I didn't share.
I think the bags was Chris Camillo's play that they were going to do like a seasonal fashion trend. But yeah, go ahead, Rick.
I mean, I doubt that it's going to revisit COVID lows. But if it did, this would look really, really silly.
Yeah,
so, and we're not actually ridiculously far. We're pretty far from there, but we're not ridiculously so.
Honestly, it's worth looking into at this point, right? Because like I feel like that's the trend that at least I'm in. I think we were both in. Like you're looking at shift 4 after a drawdown. I'm in UNH as a result of a drawdown. I am looking at Duolingo as a result of a drawdown. I think Lulu is something that's been beaten up as well. It's just in this market where everything is just running. People are looking for opportunities on whatever is not running and to basically have a turnaround play. And I don't know if that's good or bad. I won't comment on like that as a strategy. Obviously, it's dependent on the actual names.
Yeah. And some of it is like if it's a huge turnaround that's needed, like PayPal needed in 2023, those take time. Starbucks is another one there. It takes a lot of time to do that. And it's not always guaranteed versus you have the UNHs where it's like, okay, there's definitely some headwinds, some of their own making, some just because of the environment. And then there's some like maybe Lululemon that a lot of the headwind is just tariff noise. And once that quiets, then they'll go back up. So yeah, that's one thing that I heard as well. But again, I'm not the most fashionable guy. So
I think there is real power in social arbitrage as a strategy for investing. Google Trends, looking at virality on TikTok and looking at foot traffic in stores is absolutely a leading indicator of sales and earnings beats.
Oh yeah. Yeah, we'll have to see. It's looking attractive though. It really is. It is. Yeah, long term, I agree with Sigig. Like that's why I would not be here long term. Like it might be a year-long swing or something like that if I do get back in, but
absolutely. What is next, Roy?
Nubank.
Oh God. Okay, sure.
Yeah, Nubank's coming up in doing earnings this Thursday. Usually longer earnings. Of course, they're positioned in Brazil. And I do own some. It's one of just a couple of companies that actually have leaps in as well. Geopolitical stuff is always going to be an issue with Nubank, especially in Brazil, where most of their revenue comes from. That's quieted a little bit. There's a couple of things that I don't know. I'm cautiously optimistic on, but it might be like a quarter or two too early to really see a pop in Nubank. One of those, of course, is Brazilian real with USD. That bottomed essentially at the end of quarter four. They had a massive headwind as a result for their top line revenue because they're mostly in Brazil, but they report in the United States. So I think it was. Oh, I've actually got a post on it. Let me pull it up because I don't want to give wrong information on the Nubank.
Oh, and here we have some from firsthand DD future investing. Our honorary white girl in the FinTech Friday show is buying a lot of Lulu clothing. Everybody,
all right, Tanner, buy a Leap too. Buy a bunch of Lulu clothing and then Leap.
I love how he specifically called out that it was male stuff. Yeah, like thanks, Tanner. It could be big. I don't know.
And Melly's a good play. I do see somebody commenting on that. I'm not hating on Melly at all. But yeah, bottomed essentially here, the exchange rate, which is good for them. It's still, it's kind of at parity over the last year, but that's something to keep an eye on. Deposit franchises is something that they're building up in Colombia and also Mexico. That does have a temporary impact on margin. And I think that this is really what the market is looking at for Nubank more so. They might actually put a slower revenue number on the top line, but I think the biggest issue is margin. They have short-term headwinds from several different factors on margin as well. But if gross margin, if they see some stabilization here or even an inflection, I think that'll be really good. And it sounded like, at least I looked at the call again today, that I don't know if they were predicting a bottoming this quarter or not on the margin rate, but it sounds like it's pretty close. And then, of course, you have the Selic rates, which are the Fed funds rate in Brazil. That's a bit of a headwind over time. So some headwinds, but I don't know. I still think it's worth a hold. I'm not adding massively, even though it broke below 12 today. I'm just like, I've got a nice enough position. It's the right size for my portfolio. I'd love to see it go up. Hey, maybe it'll go down. Who knows? If so, depending on what the earnings results are, I might actually buy more. Now, Austin Harrison, you came just in time. Go back to the beginning. There's some stuff on Google you'll enjoy. I'm just kidding. It's a small thing, but it's one of those things worth keeping.
We didn't even talk about Google. Did you see the Google Perplexity thing? It's like the top thing in my actual title.
Yes, that's actually really interesting. Unsolicited offer by Perplexity to buy Chrome outright from Google. They say that they have the backers to be able to afford it. I guess
was it the ballsiest thing you've ever seen today? Like, actually, I can tell you the ballsiest thing. Oh my gosh. Okay, yeah, we'll finish this topic first. Go ahead, Roy. Or the Perplexity.
So yeah, Perplexity, they made an unsolicited offer. So Google was not looking for buyers to buy Chrome. Now you need to know Perplexity actually runs on Chrome, so it's not on the same technology. So it's not like completely alien or strange. Regulators will probably say no because they won't want to see one player again dominate the search. Well, at least that sort of market. And I also have to question who the backers are. Mm-hmm. I'm actually wondering if it's Apple.
Really?
Perplexity is one of those things where it makes sense to me as an Apple acquisition. And me too. They're a private company. They don't have to disclose. They have to disclose a lot less. So Apple could already have a big stake in Perplexity and even be looking possibly to acquire them at the very least or partner with them very deeply. Kind of like OpenAI and Microsoft with that kind of partnership. A little bit different. So I don't know. I thought this is interesting. It's obviously Google's not going to say yes. The only reason why they divest from Chrome is if they were forced to by regulators. And I hope that doesn't happen. It shouldn't happen, but we'll have to see.
The reason I called it ballsy was because how hard do you think Google laughed when they received that offer? Like, do you actually think they're going to sell off an asset like Chrome? Of course not. Of course not. And especially because normally you would see the companies with the deepest pockets and the highest pool of resources be the ones in the driver's seat for making new acquisitions. And yet you're having this smaller private company looking to buy an asset from one of the Magnificent Seven. Like, it was not news that I was going to expect. It was not on my bingo card for today at all. I could see Google making an offer for Perplexity, just as I can see Apple making an offer for Perplexity. Perplexity making an offer for Chrome, not on my bingo card.
Yeah, it's interesting. Plus, they have their own browser now, Comet, which a lot of people have had some really excellent feedback on. I like the founder of Perplexity too, but they're dependent on a lot of other people's technology too. So it's not a public company. I don't know that I'd want to invest in it anyway, even if it was. But yes, it was interesting. It's just kind of one of those like shots across the bow type of thing that I didn't expect to see. So. Ronak, just because I saw your question, and also Spicy, buying bullish tomorrow. I do actually have a small buy. It's 100 shares or maybe a little bit less, so not massive on bullish. And that's, for me, just going to be mostly a swing. Like long term, they seem decent. I mean, it's a crypto play that's largely international, but I don't know. We've seen IPOs recently, so... Mostly it's that. Figure, though, like Figure is one of those where if it actually fell back down to the IPO pricing, I would maybe think about going in a lot heavier on that one. Bullish is one of those where, I'll probably be out after 30 days. Are you on that one?
No,
Bullish?
I am not. I don't know anything about that. I live under a rock, apparently.
Well, you're not international enough. Canada is just a 51st state, so you may not be aware. They do a lot of crypto volume, like a whole lot of it. So if you're like bullish, pun intended, I guess, on the crypto space and industry, maybe it's a good long-term one. I just prefer to be in crypto itself, or maybe a treasury and like proxies like Robinhood.
Google sells Chrome to Apple and then buys Perplexity with the profits.
That would be amazing. Regulators would also say no if they were forced to do that, but that would be so funny.
Brock Capital, thank you for the $5. What impact has AI had on your research and stock selection? If it has made an impact, and in what way? I think for myself, it's more of the deep research function, just to put together, a case. Honestly, I think AI has helped quite a bit with my scripts because I'll upload my research and I'll upload my scripts and it'll just create a script that's in my voice for speeding up the process for me to make new YouTube videos. Like scripts I need them because I can't just, ramble. You guys have seen me yap, and it sounds incoherent most times. And I use AI quite a bit for that. In terms of the actual research, I don't know. I don't use it as much as I probably should. I still just go I use visual stocks for the charts, and then I actually just go directly to the investor relations for the actual numbers, and I listen to the earnings call. I guess that's old school. I don't use any third-party tools predominantly. And if I really needed to, I could use AI to just check my thesis and actually poke holes in it and present the counter argument just to see if, check my bias essentially.
Yeah, for me, it's not too much different. Like I've just found it, at least OpenAI and Gemini as well, though actually not as bad. Gemini's been outperforming OpenAI recently, despite coming out with GPT-5. But it will tend to mess up a lot of the most basic, most recent information. It does great on if I'm doing research, and I often do on things that are 2,000, 3,000 years old. It does great. But yeah, I mean, honestly, fiscal AI maybe. But I'm skeptical, and I'm very careful to do that. Now, what's been very helpful is sometimes I'll be like, okay, the CEO said such and such, or I think it was a CEO, maybe it was a CFO, and I can't find it in Q2 earnings. Fine for me where this was said. It will do a great job if it actually exists of oh, this is an interview, CNBC, here's a link. That's awesome. Now, where it's actually been very helpful too is to be able to understand a company on a deeper level. So, for instance, Air Test Systems is one of those that it's my newest holding. I've talked about it a little bit here and there. I've not done a separate video quite yet, though almost at that point. It was really helpful to be able to understand okay, I know the space a little bit, but I'm a novice. So I asked a lot of very simple questions of like, okay, why is GaN such a big deal versus silicon carbide?
Yeah.
Who is actually using this as far as other companies? Who is their actual competition? And of course, you have Teradyne, the big one. But I was like, beyond that, I don't know. What's the TAM on these sort of things? Now, it won't get everything right, but at least at this point in my research process, I get to the point where I'm like, okay, poke holes in my bull thesis and give me some bear arguments that I've not considered. And I don't want it to be friendly or nice to me. I want it to be very in my face and confrontational. You have to almost prompt to poke at it to get it to do that. And it was very, very helpful to be able to help me understand really the moat that I think that these guys have in GaN at the wafer level. It's really exciting. So it I don't know. Like, I think it's not good at that sort of thing at all.
So maybe I can plug something and totally unaffiliated, but Tanner and what you were saying sort of reminded me of, I have this tab open on my computer, and this is public.com generated assets. And I can say, like, I'm looking to invest into UNH as a potential turnaround play. Give me other feasible turnarounds, and then what it'll do is it'll basically have an LLM, and it'll create a list of other tickers for me, and we can test this in real time live around making an ETF for me to invest in. And then the next iteration of this would be feasibly to dive way deeper by merging the financial data and the actual qualitative data.
Yeah, Perplexity has done something similar as well. There's several of these out there. Gemini actually does really well on this end too, for the deep dives, competition, all that stuff. The danger in hey, give me some 10x type of plays. All it's doing is basically looking at other people's posts and information. And if a lot of people socially are excited about whatever company, you're going to see it kind of pump that. So yeah. Unless you give it very specific prompts into engineering that asset. Otherwise, that was actually pretty quick. Public's pretty interesting. On their actual app, they have Alpha, which is their LLM that they use that you can do a lot of things with. So
the last thing I'll show you here. So yeah, you can see the asset versus S&P and whatnot, but you can also see the top list. And this is stuff that other people have created with different returns. Like I can back test other people's returns. Jamal's SPAC collection is something that somebody has created, and I can basically see what other people are researching. Ukrainian drone tech investors, and it's just RCAT. Anyway, so I don't know. I thought that was a cool tool for the fact that it's free.
Yeah.
It's pretty cool. Okay, oh yeah, this is the thing that I want to show you. Are we done on the
Perplexity Google? Yeah.
Man, and this might be a little bit of this might be a little bit of the dessert for today, since you guys have heard our stream for over an hour and 15 minutes. Here we have Kendrick versus Drake for Tech Bros. And Elon basically came out with a post last night saying that Apple is making it impossible for any AI company besides OpenAI to reach #1 in the App Store, which is an antitrust violation, and that they're going to take legal action. He got community noted by his own platform. And then Sam said, I've heard alleged that Elon does. He's like, it's remarkable given what I've heard that Elon does to manipulate X to benefit himself and his own companies and harm competitors and people he doesn't like. And Elon says, you got 3 million views on this BS post, far more than I've received on many of mine, despite me having 50 times your followers. And Sam said, that's a skill issue or bots. But what's more important is he said, will you sign an affidavit that you never directed changes to the X algorithm in a way that has hurt your competitors or helped your own companies. I will apologize if so. And the best part of this whole thing was somebody asked Grok who's right, and Grok said, based on verified evidence, Sam Altman is right. Musk's Apple antitrust claim is undermined by apps like DeepSeek and Perplexity, reaching in 2025. Controversy. Conversely, Musk has a history of directing X algorithm changes to boost his posts and favor his interests, and calling out hypocrisy. And the comments were so amazing. They're like, Grok is going to get banned again. Grok's last day at the office. It was just too good, man. Grok is about to be fired. Anyway, so I have a entire bookmarked folder of Grok roasting people, and it's just the best thing ever because Grok does not hold back. And this was just the latest case. I don't know if this is good or bad, but I don't think Elon's going to like getting roasted by his own AI on his own platform.
Probably not. There might be some algorithm changes there for Grok. Never insult the Musk.
Yeah, Grok is about to be hired by Zuckerberg. And then the best part, Roy, was ChatGPT. Did you see this? ChatGPT quote tweeted this. This is like, this is why I say it's Kendrick versus Drake for tech bros. ChatGPT quoted this saying, "Good bot, very truth seeking."
That's awesome.
Oh man, this is so good.
Yeah, Musk has made like, I don't know. He likes making enemies for some reason. So
it
has nothing to do with Tesla, thankfully. But
there's just not enough drama in his life. Apparently, he just needs more and more, man.
I guess, yeah. Elon is Drake. Okay.
Elon is Drake.
I even know who that is. Drake and Kendrick Lamar, right?
It's fine. You are employed. Anyways, shall we move on to some questions? What do you think? Do we have any other topics?
Let's do Q&A.
Yeah, he's not like us. Selling Uber to buy Duolingo tomorrow? ? Do you own Uber?
No, it's in my challenge portfolio, but no. Yeah, we're not allowing trade sells, nothing like that. You're actually, I think, winning overall in that portfolio through the strength of SoFi, but also you've just not had many that have bled the other direction. So you have a lot of I have a lot of high flyers, but I have a lot like LULU that's just killing my portfolio. So,
let me actually.
But I'm like, I think I'm third.
Yeah, hold on. I think somebody brought that up. It said, Arlie said, who is winning the DGen stock pick? Well, I'm glad you asked. Let me bring that up for you.
But as long as you're winning just basically because of SoFi, I'm okay with that because I own a lot of SoFi. And you got to pick first overall.
I really am winning. Holy shit.
Oh, yeah. No, you're destroying us. It's not all SoFi, though. Like, you probably would be up even if you had something perfectly flat.
All right, so these are the picks. We did 12 rounds, and yeah, I'm up 15%.
Yeah, Manuel is up a bunch now that Nebius is running. Myself, I've got some that have run, but I've also have a lot that have just sold off hard. So yeah, I'm in the mix there. Gemini, thankfully, is not winning. Like Plague ended up dumping on earnings, so yes, take that, Gemini. Bitcoin miners as well. It's heavy into those. So Neil is the only one that's down, but
yeah, Neil, local PayPal, poor Neil, UNH. Yeah, I understand. Shift 4,
Barba, and Novo Nordisk. Oh man,
oh my God, everything's been killed.
I'm actually surprised he's not in Enphase. Oh, I'm surprised he's not down more.
Yeah, exactly.
Now some of those names I liked. Like he picked PayPal a lot earlier than I would have, but I like to think I would have picked it by round 5 in place of Snowflake. That was the only pick that I messed up on. Everything else, whether it's down or not, I still like. But yeah.
Yeah, I have some like anchor positions, QQQ, AVGO is probably one of the reasons why I'm up. Lemonade is definitely one of the reasons why I'm up. This thing's up like 40% in the past 2
Microsoft
weeks.
too, Shopify,
Microsoft,
BN.
Shopify, yeah, Brookfield, Costco, baby. Yeah, Amazon's been down a little bit, but I think SoFi, Broadcom, Lemonade are the things that and Cloudflare honestly dragged it up quite a bit. Nebius for Manuel. HIMS I think hurt you because that's drawn down quite a bit.
Still up, but not by much. Yeah. Palantir's doing good for me though. That 11th round pick that I got laughed at for.
Crazy. That's crazy,
dude. So I looked today. $200 strike for the monthly. So September 17th or whatever that date is, pays more than $6.50, which was the share price, actually over the share price of my largest buys for Palantir.
Yeah,
the boss money.
Yeah, you bought at the very top. It's actually interesting, man. I keep having these debates with a friend of mine who's like not bearish the market. He just thinks we're very toppy, and he thinks things can get cut by quite a bit.
There's a guy that I know a few like that. There's a guy that I trained back at the university we're at. And in training, like you mentioned that, like we started talking stocks and stuff, and he got out, I think, like most of the way through 2022. So he's actually had most of the pain already. And he's like, I'm going to go 100% in treasuries. And the markets kind of outperformed that a lot. And he realized his mistake. But the thing is, like, even when you realize your mistake, a lot of times you're like, well, maybe I'll like wait for this and then I can get out, with a little bit more money. No, it's just a mistake. Let time, if you're a retail and you don't need the money in the next 5 years, time is on your side. Put it in quality companies, make them work for you, and give yourself time. Don't try to time the market. It's that old saying, think Buffett, but it could be, one of the other greats, that time in the market beats timing the market. And it does time and time again.
That is correct. Yeah, and Gemini was created from whatever was left at the end after the 5 of us had gone. 5 of us had gone, plus ChatGPT, a 6th, had gone. Gemini just got the pick of whatever was left and still smoking all of us because it's all degen picks, man.
Yeah, in like over like a month or month and a half or 2 months, like it could do really well in the face of a pullback. And when there's a risk-off environment, it's going to get killed. So I actually, we took a look afterwards. We all made fun of Gemini, but over the short term, like it could have picked Open Door and like been up ridiculously just because that's what happens in risk on environments. But yeah, I like ChatGPT's pick a lot better, even though I think it's down. It might be the second worst. But I think all of us, including Neil, including ChatGPT, beat Gemini. We'll see.
That's a bold claim. Okay. Yeah, maybe.
Did you see its picks? Bring that up again one more time.
All right.
These are not good picks for a year.
Carvana, amazing pick. It went from $3 to $400. Come on.
No, Oklo is good. I like that one.
They just missed earnings. Oklo just missed earnings.
Doesn't matter. Like, it's fine. Plug though, like, thank you, David. Appreciate that.
Plug Power, DraftKings.
DraftKings is in a place that's being disrupted. Moderna, I don't know why. And Ionic is actually kind of interesting because I have not looked at it here in the last couple of days, but I think it's probably up. There was some interesting announcements. Well, it's actually down a little bit too. But yeah, when the market goes risk off, like this is a speculative name. It's kind of like biotech. It's not biotech. They're not going to realize revenue for a long time. Same with qubits. Those names will get absolutely destroyed in a broader risk-off pullback. Spotify is probably fine, and MasterStrategy, sure. Yeah. Clean Spark, they're going to buy another private jet, and it'll just tank them. GitLab is okay. I think GitLab might be down. They had some movement on some C-suite stuff. That's not always received well. Yeah, I mean it's down year to date.
Dude,
but
I think
I don't like that one.
The craziest thing, didn't the ChatGPT and Gemini make a trade of a stock, and it was just like such a one-sided trade? I think Gemini gave ChatGPT Apple for MicroStrategy or something like this. if I remember correctly. But yeah, I don't know.
So I mean, like, just so much on crypto and miners,
I kind
and
of
it's
like
doing really well right now.
ChatGPT's portfolio. Apple, SMCI, Celsius, Netflix, Lilly, Airbnb, Marathon, Rivian.
Lily, and somebody asked this too. Don't you consider it an excellent opportunity? It might be. Like, there's Nova Nordisk. Like, part of its problem is Lilly is doing amazing things at the same time that Nova Nordisk. I don't know. Like, if they were trying to fail, maybe they would be a little bit worse, but it would have been really tough, to be honest. So Eli Lilly, like, clearly differentiated GLP-1 assets, just better strategy, better management. I've not looked at the multiples over the last week, but it keeps falling. I've not looked at this today, so maybe it's up big. But yeah, no, I've said it before. Oh yeah, it dropped nicely. I've said it before, like, instead of chasing Novo Nordisk and just looking at pure valuation, I would rather go after the more expensive, clear leader, at least for myself. And Eli Lilly very much is, despite what's happening with the price action. When it's basically your competition that's driving this, more so than any failings on your end. And a lot of people are concerned with GLP-1s, and yet you actually have the differentiated product. That could be an attractive entry. Now, I'm not going to get in. The reason is, like, pharma is a space that it's just high regulation. I know I'm in HIMS, so I guess never say never. I could be at some point. But I mean, their margins are really good. The price to earnings, forward price to earning is 28 for a company that has been growing ridiculously. And if you look at, here's revenue. If you look at revenue, I mean, it's very, very strong. I would not really be concerned by these guys. They do have some debt on their books, which I was not aware of. I'll have to take a look at that. So, but yeah, long term, if I was having to choose between a cheap Novo Nordisk and Eli Lilly, it'd be Eli Lilly every single time. Yeah.
Any views on Transmedics, TMDX?
No, I mean, that was one that was in our stock competition. Data driven investing picked it up. A lot of people were talking about it like the 3 months before. I don't really know anything about organ transplant and that whole side of the industry and space, so it looked very attractive on paper, and I decided, I'd rather invest in something that I know. And I think that's a good principle for most of us. Now, if you know, or you spent the time, and you can study it, you don't have to, like, know intimately the industry, and you're convicted by Transmedics, maybe it's still an opportunity. It's run a lot. Don't let that dissuade you from investing in quality companies, because a lot of things have run a lot, and that doesn't mean that they're expensive. You have any thoughts on it?
No, not really. I don't really research the company, nor do I know almost anything. I know maybe like 2 things about the company, and that's it. Okay, so this is actually a question that I want to get to because I think it's an interesting one. Roy, what will actually, no, not that. This is the question. What is the guess on Buffett's big holding that's getting released on Thursday? He basically has a $5 billion secret stock that he's bought into. I tweeted tongue-in-cheek saying, it could be UNH, and that would be the most entertaining outcome for it to be UNH. But Roy, let's pair that with this other question, who asks, what would you do if it was if Berkshire was announcing that they were buying PayPal?
So
I don't think it is.
It's very likely an industrial. Reason why we know that, if we look at 13F filings, they actually have the sector weighting. That's where it was skewed. And so a lot of people thought, hey, it's probably an industrial. And I think that they're right. So that means no PayPal. Now, if it was PayPal, be like, all right, this is awesome. Probably also means we're getting a dividend, which, that's fine, whatever. But it is a Buffett-like company in some ways. And but I would be very surprised. I'd be very excited because the share price, like, that's the thing, is whatever company this is, it's going to go up in price over the short term. There's always a pop, and then there's a lot of investors, including institutions, that just follow Buffett, which I think is a mistake to do that for anyone, even if you're Nancy Pelosi. Although you could do wrong, more wrong by not being and following those. Now, what do I actually think it is? I think it's Illinois. Well, I was like 90% sure is Illinois Toolworks, ITW. It's one that he's been rumored to be in for a long time. It's a conglomerate industrial type of play. You look at its ROE, ROIC, everything is actually looking very attractive and Buffett-like. They have a small dividend as well. You can see that they have a good enough moat as well that they probably also benefit from some of the tariff stuff that's happening. So it wouldn't shock me to see that one be targeted. Some people have said Honeywell, and I don't know. Like looking at ITW's actual earnings filings and a couple other indicators that you usually look to see with a Buffett secret stock, I've not seen those. So that's caused me to question that ITW thesis a little bit. I'm still sticking with it just because I don't see something out there more plausible. I don't think it's Honeywell. I don't think it's 3M, but it could be. So Caterpillar. I think that's too large. What's the market cap on that?
On Caterpillar?
I could be wrong, but I think it's pretty big. Yeah, it's almost $200 billion. Yeah. No, we're looking more at like 75, 85 billion range, I would guess, as far as market cap. That tends to be the sweet spot. And to your credit, though, with UNH, he does love insurance. That's I ended up.
He's been in UNH before, though. He's been in it before.
Yeah, I don't know that it would be though. I think that mostly. I think it probably will be an industrial, and it'll probably be a name that we've never heard of. I would love if it was Illinois Toolworks because that would be like the last two secret stocks I got right on Warren Buffett.
So is there any actual evidence that pushes us to the industrial side of things, or is it just speculation on your part?
Yeah, 13F filings, if you look at that for Berkshire Hathaway, they actually have the breakdown as far as sector weighting, and you look at the other published moves that they have, process of elimination, is either there's something that we're missing or it is in industrial. So it's not a guarantee, but it's high likelihood. And I think anybody guessing a name outside of industrials would be probably mistaken. Plus, go ahead.
No, I was just going to say, well, let me ask you this. If you are narrowing it down to that degree of saying, okay, it's maybe ITW, maybe it's Honeywell, maybe it's, let's say three names or four names.
3M too. Like it's a pretty good.
Why wouldn't you just place a very small sized bet of like some call options? Because we know that the speculation is that there's going to be an announcement this Thursday, but I don't know if that's speculation or confirmed. And then if it is one of those three names, that it's going to jump like 25-30% in a stock that has a very low, what is it called? A very low beta, like very low volatility. And so you could get an outsized return. And if you're wrong, okay, you hold it for 3 days and you cut it, probably at break even or at a very, very slight loss.
So yeah, the problem with that is unless there's something indicating otherwise, maybe there is, but I've not seen it. When they do those 13F filings, and not 13F, can't think of the name, but when they do the filing that indicates that they have a majority stake or above a 5% stake in a company, that is, there's no guarantees that Buffett doesn't request that secret stock status again. And he does historically, usually over multiple quarters as well. So it wouldn't shock me if there's people that are doing just that. They're doing short-term call options and they're risking, pennies. It's not a massive thing that end up just quarter after quarter getting destroyed because I don't know. There's a lot of names out here too. Like it's not just those three that I necessarily narrow it down to. I think that they're all prime candidates in that sector. He does love railroads.
Yeah, I mean, like he's requested the special status for quite a while now. I remember, it's been more than several quarters where he's requested it. So I don't know how he can keep doing that. Like the rules are there for a reason. If it's one or 2 quarters, sure, but you can't do it for like a year plus.
And it's not like it's so frustrating because I don't think he should be given that right. I don't think anybody should have that right. There are some protections and things that you could at least argue and say, well, this is good for consumers and good for retail. We want to protect them. This is just about protecting Warren Buffett because he's very successful. People will flock to whatever he's in, and it'll be more expensive for him to buy and accumulate. But why should we protect that? It makes no sense at all. It frustrates me. He should not have that advantage. And since he clearly does, when he either retires or passes away, which I hope he has a long, wonderful retirement, but maybe this is his retirement. I hope whoever his successor is does not get the same right. It should not be done this way. It's not right.
I completely agree. I think if retail is forced to buy Tempest AI at a 40% premium because Nancy's filings came out the day before, that like Buffett shouldn't get any preferential treatment just because he wants to keep accumulating a position.
So I saw we are in the Q&A position, guys. So we'll be taking those. I did see David M ask about this at 7:53, and I think that's probably why he donated the $1.99 to me. So we need to give that one priority.
Sure.
So have you guys 7:53? Have you guys thought about revisiting Oscar? They guided for $12 billion in revenue, and the market cap is so under $4 billion. Oscar is one that I looked at for a little while. I stayed on the sidelines. In part, I just don't like health insurance companies. But I've said this before, and I still think it's going to be a good trade, very likely over the next 3 years. I would not want to be in this when Trump is getting out of power, just because I feel like there could be some challenges, whether they deserve it or not. There's just some closer ties there to Trump. I would much rather invest in Oscar over UNH, even though you look at UNH and you're like, oh man, look at this massive buyback, look at this dividend, look how down and compressed and low it is. Oscar, I think, is probably the better company in two respects. One, as far as an investment, and two, as far as just the way that they handle their claims versus UNH, which there's a reason why their CEO was assassinated. Not justifying it, and now we're probably demonetized. You're welcome. You're muted.
I said thank you for denying me my $4.53 that I would have gotten from this 2-hour stream.
Yeah.
So, Buffett wears Lulu. He is investing. Buffett's buying FedEx. Maybe all possibilities.
UPS, maybe.
UPS. Sure. Whatever you think is boomer in your mind is a possibility for him to buy. One thing he's not buying though, Roy, is Nebius.
Yeah.
And you know why he's not buying Nebius? Because it's growing way too fast. Why would he buy something that's growing 600% when he can buy something that, pays a steady dividend, I guess?
More Coke.
You know who I'm buying? Coca-Cola, ticker symbol KO, not COKE.
Really demonetized now. Thanks a lot, Tevis.
He's not at that part of the retirement yet, guys. You know who is buying Nebius? Is this guy right here. And I am sad because it's running away from me when I'm trying to buy more because the earnings are just fantastic.
So let me ask. So I think we did, and I think you were involved in this, where we did the deep dive into Nebius. Were you there for that or not?
I was. Yeah, we did stock tank on Nebius.
At the time, I vaguely remember that you were like, so what changed for you other than the price?
I did more reading on it because I didn't really understand. I think the stock tank episode was a little confusing because they explained the sum of the parts valuation and they went in depth on all of the different stakes that they have. And they're very different in terms of they have a stake in this and a stake in that and a stake in this, and they all make money from. And then fundamentally, I think you have to understand what the core business is and how the core business is scaling and how they're going to grow into that valuation. And I think that is backed by execution. And this was the first earnings report that I was able to catch and read through the report. I think Manuel did a brilliant deep dive after the report. And it seems as though everything is scaling very well, actually ahead of schedule on some metrics. So that really made me, I had a starter position before earnings just because if it fell, I get the average down. If it goes up, then, I cover my upside. and then I added more after earnings, like them being over 70% quarter over quarter with average revenue per ARR, and basically 100% plus quarter over quarter on revenue. Like I think that's very exciting growth, and I think that the guidance that they have and reiterating that guidance, raising that guidance, is obviously very exciting, and the stock shouldn't be trading this low where it is right now if you really believe that they can actually execute to get there. And then that's a matter of if. And so that's, I think, the piece that was missing in the stock tank is like they talked a lot about the sum of the parts valuation and how it was undervalued by that metric. But I think even if you look at the core business scaling and the capacity expansion, for the contracted power going through 2026, over 1 gigawatt, like I think that's very exciting too for a bull case.
Yeah, no, it's a good solid company. I'm glad to own more NVIDIA and have sold out of my Nebius for very nice gains, but yeah, it could be very good. I just never really liked some of the parts type stuff, but that's probably the way that it should have been pitched was look at this incredible cloud business and here's what you get for free.
Exactly.
And that would have been more compelling, but yeah,
that's exactly it.
It's a good business. So
I think you already did this at the beginning of the video. I talked about this. Do we own Nubank? I do not. I had Leaps. I cut them. Roy does.
I got to offset those gains somehow. So between that and PayPal. Oh, yeah.
How do you compare New and Mercado Libre? If you had to buy one, which and why? I think that's a question for you.
I mean, like those were the two Q&A periods, so we'll make it quicker. Those were the two international LATAM plays that I was very interested in, and it was very close. Ended up going with Nubank just because of their extreme resilience. You've seen what they've had to go through from the very foundation stages of their company. Incredible headwinds. And so basically I had to look at that versus what Melly has gone through, which it hasn't been an easy ride for Melly as well. And I'm like, okay, which of these two is going to be the most resilient in the face of potential geopolitical chaos? And I chose Nubank as a result of that, because there's always a risk with investing in emerging markets, even in more stable and stabilized countries. So, and then I also saw Nubank have the beginnings of enough success in Mexico that I'm like, okay, they succeed in Mexico, they're going to succeed everywhere in Latin America without question. And they'll also be able to jump, I think, over into Africa as well. They do a very good job on that. So had I gone Melly, I would have been in a lot better place. And I think Melly is a very good company too, but I just prefer super concentration. And so I chose Nubank. Not a big factor, but the other part of it was just realizing that I could actually do covered calls and cash secure puts in Nubank. Melly, I'm not that rich. So yeah, they need to do a stock split. They really do. So
I think so too. And I think Duolingo should also do a stock split while they're at it.
Maybe Palantir.
Too soon.
The Bears right. Get back to $30 a share because of a 10-for-1 split at 300.
Oh my gosh, that would be crazy. Can we get thoughts on UPS? This bad boy looks hurt. Well, you might be pleased to learn that Buffett is potentially buying it. Question mark? Who knows? Stay tuned.
Yeah, UPS is usually a pretty good read on the economy, but at this point, a lot of what they've done, both them and FedEx, is done through like the logistics back-end stuff that Amazon's doing, not directly, but through their partners. So I think that we could read too much in terms of the economy on that. UPS is not one that I'd really want to be invested in. I've actually had multiple friends that have worked for them, some in management and some lower down. And I think they're an okay company, and I don't want to invest in okay companies.
Yeah, I think FedEx is also struggling, like from the financials perspective. So it seems to be affecting them across the board. Brock Capital has been watching for a long time. Appreciate that. What do you think of ServiceNow long term?
Long term, I would have to learn and look more into them. I think that they're a good company. I think that they're probably fine long term, honestly. I like them as far as long term. I know it's a very different company, but than a lot of their peers. So Not into it though, and I'd have to really look deep into that rather than surface. Like I'll pay attention whenever they have earnings, but
yeah. Affirm. I mean, we've talked about buy now, pay later in the past. Roy has answered this question. I've talked about this. Generally, not a big fan. But Roy, I mean, I don't know how much you want to regurgitate what you've said in the past.
yeah, I mean, like Max Levchin's great. They're mostly buy now, pay later. And they're always doing a few things to like spin off, and maybe they'll be successful with that. They do have some really interesting partnerships as well. Buy now, pay later is one of those that I think is going to see a lot more regulation and regulatory stuff that's happening for the next 4 years, just because it's largely unregulated. That has a chance to blow up in a lot of people's faces. In the private market side, FICO, and there was one of the other, I don't remember which one it was. We're looking to incorporate buy now, pay later into their scores. But Affirm, I don't think Sezzle, but there was maybe Afterpay and several others said, no, we're not going to release any of that data to you guys. You're on your own. So we'll have to see where that goes. I do think that at some point regulators will step in and say, hey, you've got to actually release those numbers. We need to know where consumers are, but we'll have to see. So I just wouldn't want to be purely in that. Another thing with the buy now, pay later stuff, there could be a lot of defaults. And if you are not doing what PayPal is doing with their KKR loans, and also with one other segment, which we'll see where those go, where you're basically selling those for just small gains, not the full gain itself, you're exposing yourself to a lot of balance sheet risk. So if the consumers are soft, if the labor market softens up, if we do go into a recession, Affirm is going to absolutely get destroyed. Sezzle will too, Cash App, Afterpay rather, that'll get smacked. PayPal, a much smaller buy now, pay later thing. But I just prefer to not be in pure buy now, pay later place.
Yeah. I know your stance hasn't really changed on that at all. I think this is an interesting question, actually. When buying a home, do you guys recommend putting the most payment down, or at least the least and letting stocks ride? I think it really depends on, what the rates are and what your rate of return is on those stocks. Generally speaking, people don't put a lot down, even if they have a lot down to put, because why would you lock up so much capital for not really a lot of return? You can just play with the bank's money essentially and leverage your own money to compound. I don't know, Roy, if we differ on that, but I think a lot of investors would say like minimum, as long as you can cover the actual monthly, mortgage and expenses without significantly shooting your cash flow in the foot. If you can do that, and if you have an emergency fund, then everything else that you have in investments is absolute gravy that you should leverage in investments, because you get a higher yield there than you would with that money sitting in principal in that house.
Yeah, I actually made that mistake. We had our house almost paid off when we moved from where we did to Virginia, and ended up buying a house. And we put houses were more expensive there, and we put a lot in there. And so we went from very comfortable amount in the bank, still making plenty of money. Things are great. And the problem is we had, because of that, a very small emergency fund. And at that point, we had like a blown head gasket, air conditioning problems, roof leak. Someone in our family passed away and died. We had an unexpected $8,000 expense resulting from that. And just like thing after thing. And my wife lost her job at the same time. So it was like, you can put yourself in a position where you think, hey, cash flow wise, things are great. I'll just put a lot of money there and save myself some payment. But one is like you lose some yield there, some yield opportunities if you're going to invest it anyway. But second is like you can put yourself in a place where if something goes wrong, or in that case, like 5 somethings hit us all at once, it was tough. And it was harder to claw our way out of it when it was just me working and my wife wasn't. So regardless of that, there can be a case to put a little bit more down, depending on sometimes it's peace of mind, right? If you're looking at your cash flow and you're like, well, I got this cash and everything, and I'm really comfortable with this payment. If that means putting in an extra $10,000 that you're not going to miss otherwise, do what makes sense for peace of mind. It can also make sense too if you get to a point in your portfolio where you have, let's say you have $1 million in your portfolio outside of your retirement assets. Like that's really, really good. And you can pay off your house. Well, you probably get less yield depending on what your rate is, especially if you locked in COVID rates. But there is something to be said for peace of mind. And if you suddenly owe nothing to anybody, I guess taxes on your house, that can be worth missing out on the extra yield. But otherwise, in general, even if you're talking about like here in the United States, if you have less than a 20% down payment on your house, you have to pay a small amount each month. Usually that is not even worth worrying about unless you're like really close here. Like you put down 18%, put down 2% more and you can save that, maybe do that. But yeah, usually smaller down payment, as long as you're comfortable with your monthly payments and invest the difference. But I'll also say this, if you just don't plan to invest the money at all, which is I don't know what you're doing here then. But if you don't, just put it towards a house. Why not?
So 2 things I'll say that are interesting is one stat always stuck with me. And I think it's in the Morgan Housel book, Psychology of Money. And basically it was like, for the vast majority of people, their home is their best investment they've ever made. But that's skewed when you think of for the majority of people, they don't invest in equities. Like the home is their only major investment that they ever make in their life. And as a result, it's their best, right? Because like, what are you comparing it to? Like your car, which is a depreciating asset. The other thing that I think is interesting is that how myself and Roy tackled that question, where immediately my mind went to the offensive. Like you can get a better yield in equities, therefore stay in equities as long as you can cover the cash flow. And then Roy's mind went to the defensive around like, hey, if you go for the minimum and you have the remainder in equities, you have liquidity. And liquidity is king when bad times strike. So I think you have plenty of reasons to skew towards the lower end as opposed to the higher end of how much of a down payment to do. Obviously, do your own research. We're just 2 dudes on the internet.
Yeah.
Okay. Moving on. What do we think about 4? Roy talked about this a little earlier. I think it's bullish that Isaacman is buying. Anything you want to add more?
Guidance was really good. But I'm in too many fintechs. I don't really want another one unless something like Coinbase slips to me. Then I'll probably take some off the table from all the others and just add that one. But way too many fintechs right now. And 4 is good, but without Isaacman at the helm, I'm sure it'll be fine, but it's just a swing for me.
Yep. SBET or BMNR?
I don't know enough about like the individual differences between the two. For me, Ethereum, just straight up Ethereum. I know the others are like a leveraged bet, and so that's not a bad thing at all. But just give me Ethereum.
Yeah,
there's plenty upside there.
I don't know about them either. I mean, BMNR has Tom Lee. So maybe that, but like at the end of the day, I find it funny that like people are repackaging crypto, which has been around for so long, and it's like now like the hottest new product, and you're like, dude, like, where were you in like 2019, 2020? Like back then it was like, oh my gosh, there's this new thing. It's called Bitcoin. Your bank won't allow it. They're going to block the payment, blah, blah, blah. And now it's just like, okay, I'm going to blow your mind. It's Bitcoin, but in an ETF form. Let me go my whole life savings. It's like, dude, Bitcoin's been around. Where have you been? So anyways, that's like my silly take on that.
Yeah, a lot of people are saying BMNR, Tom Lee, like that's not a bad reason, honestly. So
yeah,
and it's more of a pure play. So if I was going to go those two, yeah, that makes sense. BMNR, but Ethereum just for me. So
speaking of turnaround plays in a hot market, why or why not Amazon? Yeah, your boy put 15% of his portfolio into Amazon. So where I stand on that.
That's why it's down, huh? Or
That
did you
is-
buy it on the dip?
I bought it before earnings and after earnings as well.
Yeah, I mean, like the earnings themselves, it's been a couple of weeks, but I looked at it and I was like, they're good earnings, but sometimes things get priced to perfection and it falls. 221 isn't a terrible price on Amazon. It's one of those that's been on the watch list forever. It'll probably keep being on the watch list forever. Myself, I would just prefer to buy more NVIDIA at all-time highs. I think that it's got a very, very much more of a clear trajectory. It's a huge beneficiary of the current macro, which is continuing. And we've seen that with pretty much every single major company that talks about their CapEx expenditure. It's not all going to NVIDIA, but a lot of it is. And just really good leadership there too. So I would prefer that one over Amazon, but I don't think Amazon is bad. That's kind of the reason why I've not gotten into Amazon. It's always been Amazon's really nice, but oh man, look at this opportunity here. And maybe it'll keep being that forever. I don't know.
Yep. Yeah, a lot of BMNR fans in this audience. Pope Leo, His Holiness Pope Leo asks this question. I generally only buy stocks that can write covered calls to protect my ass. That leaves me to missing stocks like Nebius. Do you guys share the same mindset? Honestly, Pope Leo, I had this exact same conversation with Nate and Elijah on Nebius because I can't sell covered calls on Nebius. And it's now like a legitimate trade-off because it's something where I have to factor it in my decision-making if I can sell against this or not. This is why, for me personally, I've split up my portfolios. And so I have a long-term portfolio, which is like, a buy and hold. And I try not to write covered calls on that. I still do, but like the deltas are the strikes are way further out of the money. And then I have a wheeling portfolio on things that I want to hold, but I'm okay to let them go. And it's a little bit more aggressive. And I just try to capitalize on the premiums on those positions. So that's how I personally have split it up. I don't know if that's going to work for you or for anybody else.
Yeah, I don't do that. I don't buy stocks because of the the opportunity to sell or write calls or puts. I will say, it can be a tiebreaker if like I see two opportunities neck and neck, one I can and one I can't. But I mean, that basically never happens. There've been many other times where I look at a stock and I'm like, either A, it's really worth selling or buying into just because of the covered calls. Like In-Phase was one of those where the premiums were juicy and ridiculous. Well, it's way down. And honestly, the premiums are not nearly as attractive, although that might have changed over the last 2 weeks. There's been a lot of movement. Robinhood was another one of those. When I bought Robinhood, it was like at $8 a share. I bought just options, but I still had enough of the options in my just cash portfolio that I could write poor man's covered calls on them. But that was not a factor really until the stock started running and running hard. And at that point, I'm like, okay, great. I am planning to take gains anyway. Why don't I write some poor man's covered calls at those set levels and realize the gains or realize some profits? But initially, like that one there was no premium there for option sellers. But I think that's the wrong reason to get into a stock. But again, if you have like 2 or 3 stocks and you're like, man, all of these are attractive and one of them allows you to and the others don't, that might be a good tiebreaker. Yeah, Matt Money says it well. I think that's trying to pick up pennies by bypassing dollars. Look for incredible companies and incredible opportunities for the stock. And if you have the option to do really good options on it and make some money on that, that's just gravy.
Yeah. I wish you'd dedicate an occasional podcast to your wheeling portfolio. Maybe. Honestly, Brock, maybe more members-only content that focuses on the wheeling portfolio. Yeah, so that's maybe the plan. Let me know if you guys want to see more of that. Why did VG get destroyed? I think that's more of a Matt Money, Chris Patel type of question. I think you're on the wrong show, friend. Do you follow VG at all?
I have it on my friends chart. Well, I'll look there just so I can cheer for you guys when you're making money and make fun of you when you're not. No, just kidding. But no, Matt Money brought this one up a while ago, and I'm like, yeah, it seemed like a good opportunity and good play. It makes sense as far, but I don't follow it closely, just headlines. So
yeah. Tevis, have you stopped writing covered calls on SoFi or not? I have $24 covered calls for this Friday and next. Perhaps not a good decision to write. I have stopped writing covered calls on SoFi, Sanjay. I learned my lesson there. Every time I write covered calls on SoFi, man, they're either super safe, like in a mile, they're never going to get called, or it just goes on this like generational run where it just triples in value over the next several weeks, and I have to, figure out my way out. So I'm not doing it anymore. I learned.
What about covered calls on Robinhood?
I rolled those out. Thank you very much, Roy. Thanks for publicly calling me out.
It happens to all of us. I've been so careful with Robinhood. I'm pretty happy that I've not gotten caught yet, but
I need a good pullback. That's all I need. I need a good pullback, and I know I'll get hurt on the other side because I'm playing both sides. But I'd rather do that and get assigned some, put some shares than have good shares get called away.
I mean, like, just look at this. This is just relentless.
How do you write covered calls on this, man? It's just all green.
From 30 to 115. That's from April. I mean, like, it just lives in the overbought RSI range. You can even look at it on the weekly time frame as well, and it just, ridiculous strength. I love it.
Yeah. Tevis, do you bet on college or NFL football? I do bet on NFL football, and I've already started with preseason. So maybe that's going to be also members-only content as my DGen plays. And selling options is like running a business, not like an investment portfolio. To Matt's point, whoever made the rule, you can't have both an investment portfolio and a business, and a business-like options portfolio.
Yeah, it's okay to do multiple things. Like, I'm mostly a long-term investor. I do have a small swing allocation that I do degen things and stupid things and usually not make a lot of money compared to my long-term investments. But, as long as it's a small enough piece of my portfolio, that's fine.
Man, can I say, actually, maybe not. I was going to say something about sports betting, and I was like, maybe this is not the place to say it. Okay, I think that's all the questions that we have for right now, at least all the ones that I want to answer. And
I see a few I wouldn't know the answer to, so I'll pass on those.
Yeah, we just crossed the 2-hour mark, 2 hours and 2 minutes. We've been doing these long streams, man, every week, but it's warranted this time around because you haven't you haven't been around. But thank you, everybody, for watching the Bootleg Weekly. Thank you for being here, for spending your lovely Tuesday evening with us. Check out our channels. Roy is the fastest growing independent YouTuber on the platform right now. The guy is on fire. If there is a stock tokenized that you can invest in, it would be Roy's career, because this man is at 6,000 plus subs now. And I just blinked and he was at 4,000 like a week ago. I need to go warm up for my match tonight, apparently. And we will see you in the show next week. Thank you. Hit the like button. And if you want to follow my options trades or my NFL picks, consider becoming a member. And also, we'll see you on Friday. Okay, I'm rambling now. Bye.
Later.